Hey everyone, I'm Khary Reynolds and welcome to another live edition of Taking Stock, where we're bringing you all the latest business news and telling you how it will affect you and your money. Always remember to head over to the website at KhalilaReynolds.com to get the newsletter straight to your inbox twice a week. And of course, reminding you to hit the like button and subscribe to this channel. Let me tell you, I joke, my daughter Narisi has been bugging me to put new videos on her channel. Last night she asked me, Mommy, how many subscribers do I have? I tell you, the subscriber thing, even the kids understand the importance. So if you haven't done it yet, just subscribe to the channel. And also let me know in the chat where you are joining us from this evening. Let me know in the comments. Now, before I throw to What's Hot, I want to thank Jermaine McDonald, CEO of Learn, Grow, Invest, for holding it down for me last week while I was in Puerto Rico. Woo! Jermaine, you did an awesome job. Drop some clapping emojis in the comments for Jermaine. And of course, well, here's a look at what's coming up in tonight's show, followed by What's Hot in Business. And come on, guys, let's get this money.
Courier company Mailpac Group Limited is in strategic growth mode after reporting negative results in 2021 and 2022. We'll find out their plans to drive e-commerce and grow their customer base from Mailpac's executive chairman, Khary Robinson. And the analysts weigh in on the latest market developments. Knutsford Express and Palace Amusement results are out. How did they perform? But first, here's What's Hot, brought to you by JMMB Group, your best interest at heart. Palace Amusement's stock split has been approved. In a notice over the weekend, Palace said that its shareholders agreed to a 600-to-1 stock split. This would bring the stock's price down to about $5 per share. Shareholders also approved an increase in share capital. This will bring Palace's authorized share capital up from 1.5 million to an unlimited amount of shares. Palace is currently the JSE's most expensive stock. The price jumped 40% last week to close trading at $2,882. Dollar Financial and lighting company Fosrich have joined forces to help bring solar power to more Jamaicans. The partnership will see Dollar providing up to 90% financing to customers to purchase solar products such as water heaters and power systems from Fosrich. Dollar CEO Kadeem Mayer said the company is reducing its risk by allowing Fosrich to source and install the products for customers. He said that Fosrich's direct involvement is also allowing for lower interest rates. According to Fosrich CEO Cecil Foster, the company already has roughly $2 billion worth of interest in its solar products. The Financial Services Commission last week got a court order preventing investment firm Stocks and Securities Limited from winding up its operations. SSL is currently under investigation after billions were reportedly stolen from investors' accounts by a former employee. According to the Ministry of Finance, the court order prevents SSL, its trustee, or its directors from winding up or dissolving the company and liquidating assets, disposing of or dealing with assets and liabilities in the company's name or clients' names. It also prevents any reorganizing or restructuring of the company or its operations. SSL was also ordered to not interfere with the investigation and to comply with the temporary manager put in place by the FSC. Soaring egg prices have resulted in an increase in the number of people looking to raise hens. Egg prices have soared worldwide over the past year as avian flu decimated chicken flocks and fallout from the Russia-Ukraine war raised the prices of energy and animal feed. In the US, egg prices are up a massive 60% higher than the increase in any other grocery item. The rising costs triggered a hunt for hens online. US-based auction site TradeMe said that searches for chickens and equipment related to caring for them had spiked 190% in January compared with last month. The site said it recorded over 65,000 searches for chickens and other chicken-related items like feeders, coops, and food. What's Hot was brought to you by JMMB Group, your best interest at heart. This segment of Taking Stock is brought to you by Bulwark Insurance Agency, insurance made easy.
Awesome. Welcome back, money makers. Let me see who we have online and where you're joining us from. Sean Chambers, says, let's get this money. Yeah, there we go. There we go. Antoinette Todd says, welcome back. Kalila, Arizona in the house. Thank you so much, Antoinette. If you guys haven't been on my Instagram or my TikTok, you need to head over there because I posted like the full review from ROI, which was amazing. Big things are about to happen at KRM. I literally left there feeling like $1,000,000. Like, yeah, we're going to make $1 million this year. Looking forward to it. And then we have Jim Moore says, Westmoreland ready and waiting. QB Quillholic Art Grand Cayman is in the building. Who else we have? Keisha Mowat saying hi from Philadelphia. Hi, Keisha. How is it up there? How's the weather? Is it like really cold right now up in Philly? Wayne is in Homestead, Florida. Big up yourself, Wayne. Kemoy is in Mandeville live. Anthony says Portmore in the building. Big up yourself, Portmore. Gonna go look at some property over there soon. Who else we have? Lanesra Portmore in the house as well. Anthony Portmore in the building. All right, well, let's get into our show for this evening. And let me see, a lot to talk about because Mailpac Group is in strategic growth mode after reporting negative results in 2021 and 2022. But they do have a plan to turn things around by driving e-commerce and, of course, growing their customer base. So let's hear more from Executive Chairman Khary Robinson. Hi, Khary. You're muted. Yeah, just unmute.
I knew I'd make a mistake there.
There we go. Good, good. It's great to have you back on. It's been like
too
3
long.
years.
Too long.
Pre-pandemic since the last time you were on the show.
I saw a clip of myself. I said, boy, I looked young back then.
It was one of like the OG episodes because we had just started the show and now we're like 3 years in. So it's great to have you back. But for new viewers who don't really, maybe living on a rock, never heard of Mailpac, or maybe they just live outside Jamaica, tell us briefly what Mailpac does and what services you offer.
So Mailpac is an e-commerce fulfillment platform, but the reality is that we aim to be the e-commerce solution provider to the Caribbean. So we all know where e-commerce is going in the Caribbean, from a logistics standpoint, from a procurement standpoint. And so we want to provide the solutions that make it easier for Caribbean consumers to be able to shop online and receive the goods and services that they want. Our core product today is our Miami warehouse, Miami mailbox solution, which allows Jamaicans who shop online to have their own address in the US and they get the goods sent there. We then manage all of the clearance, the processing, and deliver it to the customers through 13 locations or directly to their home. We also have Mailpac Local, which has gone through a little bit of a strategic merger or partnership with a company called Virtual Mart, which allows consumers to buy goods and services locally, primarily from PriceSmart as well as from grocery stores. And we have a couple of new products that we've launched, which I'll talk about in a bit. But that is Mailpac today in a nutshell.
Right. So with 13 fulfillment locations, you are one of the largest, if not the largest, in Jamaica.
Yeah, so we are the largest provider in Jamaica. We've been, number one for quite some time. The market has grown tremendously. When we came in 2010, I would say that we probably had, 10, 15 other suppliers in the market. The last count we checked, there was over 100 suppliers or providers today. But if we look at the scale of our business, our business has grown threefold since then. And so what it tells us is that the e-commerce market has blossomed significantly and continues to grow. And those dynamics also has led us to make some strategic changes in our business, which again, I'll talk about in a bit.
So yes, we definitely want to come to all of that. But first, since we haven't had you on in so long, talk to me about how the pandemic would have affected Mailpac in 2020 and going forward, 21, 22.
Yeah, I'm glad you said that because, this concept, when you were introducing this concept of negative growth and a rebound and us needing to rebound the business is a unique one, because we actually don't see it that way. The reality is that most companies were curtailed or hurt by the pandemic. Our industry saw a major boom and blip from the pandemic. So, if I was to give an anecdote, if we were in the tree cutting business and, we had 20% growth from January to September, everybody would say that September, that's a great business, 20% consecutive monthly growth. But then if a hurricane came and people just needed a lot of tree cutting services to get ready for the hurricane, and then after the hurricane, and that growth went up 40, 50%. That December, obviously, when things got back to normal, the company would have a negative growth because it was coming out of this blip. And that negative growth, if you compare it to where the company was in September, nothing from a market dynamic has changed, nothing from the customer service has changed, nothing from the economy has changed. And so, but the company, in the mind of somebody who's just looking at it at that moment in time, would say, boy, this company needs to rebound or needs to build back, or needs to come out of this rut. So similarly, we would have had massive growth throughout the pandemic because there was curtailment of movement. And at the end of the day, if you can't go to the store, if you can't travel to Miami and get your goods in the mall, the only way to get it was to go online. And so we had new customers coming into the market. We had old customers buying more. I mean, the only way that commerce was happening was electronically, and that created this mega boom in our business, which caused us to have to increase our capacity significantly. We built a new warehouse, a new processing center. We expanded our processing team. We expanded our locations, and then the world reopened. And when the world reopened, obviously, it's not going to look like it did during the hurricane, in the analogy I gave you, or in our case, in the pandemic. But if you think about the fundamentals of the business, we're still the leading provider. We're a premium provider. We have expanded our infrastructure. We've expanded our technology and our capacity to handle more. A lot of competition that was there in the midst of that early part of the pandemic has now fallen out of the market. And so for us, we see us being in a better position today than we were pre-pandemic. And our numbers say the same thing. But again, people don't look back that far. They look at, last month or last year.
I was just trying to bring it up. So where are you now, numbers wise, versus 2019 similar period?
So I was actually pulling some numbers earlier, and again, when I hear the concept of performance, so in 2020 we would have done about $400 million in profit and paid out $224 million in dividends. But in 2019 we were at 281. I can't speak on Q4 2022, unfortunately. We're about to report those soon. But what I will say is that we are ahead of where we were pre-pandemic, as I alluded to before. And last year we paid out $425 million in dividends and still have another almost $250 million of cash on our balance sheet. So, when I think about our performance, this company as a junior market company and as a growing company in what is one of the fastest growing industries in Jamaica, is well positioned for the long run. And one of the things that you'll keep hearing me and the team reiterate is that we don't build our business, and any business that we have, we're not building it for today. So unfortunately, there's a dichotomy with the way that we look at our business and sometimes the way that the public looks at it, right? Because again, the public is looking at today versus yesterday.
Right.
But what we want to know is where we.
Well, that's how your financial statements position it as well, because I just found it, and it has 2022 versus 2021, but it doesn't go back further. So we'd have to do the research to go find 2020, 2019.
And nobody does that. That's just the reality, right? Nobody goes out that far. But again, we're very, very confident in just the fundamentals of the business, right? If you ask yourself, is e-commerce going up or down? I think everybody knows that it must go up in the Caribbean. Is our opportunity to grow greater? I mean, we're the most well-capitalized business. We have the largest infrastructure. We have the largest capacity. We have the biggest brand. We're number one in our market. And for us, we have the Caribbean in front of us. We're doing stuff in Central America now that's going to introduce us to markets over there. So, we see the world as our oyster today, at least the region as our oyster, and see a lot of potential in this business as we go forward.
But then how do you explain the dip 2022 versus 2021? I can
2020.
understand coming from that high, like you just had a boom during COVID 2020,
Yeah.
but then 2021 versus 2022, we're still seeing a dip this year versus last year.
So you have to remember when people were, one, able to start traveling again, and two, when this concept of the rebound effect. We all see it, right? And the biggest place we see it is in our social life. A lot of people who were curtailed in 2020, now in 2021, when they got, the freedom to travel, went on the opposite end of the spectrum, right? And so they traveled more, they shopped more, and did a lot more of to utilize this freedom that they had relative to the year before. 2022, we started to see that normalcy come in. So if I look at Q1 2022, our net income was down 46%. That gap shrunk to 14% in Q2 2022. That gap further shrunk to 11% in Q3 2022. So what I was alluding to is that, yes, Q1, we had this huge gap between Q1 2021 when the COVID was still there and Q1 2022. But as that normalcy kind of comes back, you'll see where we're only somewhere 14% in Q2 relative to the year before and 11% in Q3 relative to the year before.
Mm. Well, let's speak about the e-commerce sector in general. You mentioned that some of your competitors actually have closed after we saw that big boom. But there still is a feeling that the industry is oversaturated. Do you agree with that?
To some extent, we do, and so we are saying, okay, how do we serve the broader market? Because the reality is that Mailpac is seen as a premium provider, and we pride ourselves on the quality of our service, the quality of our technology, the quality of our reach, our time, and so we have the market that we serve. We have a pretty good moat around that. Nobody's trying to compete with us in that space. But you have this other 80% of the market that is very price sensitive and very brand agnostic. And so what we are doing, actually, we're launching a new brand on the Mailpac Group that is going to be tailored to that segment of the market. We're working on some very key strategic partnerships that's going to see us opening somewhere between 10 and 20 locations in a very unique way. I can't give the full blueprint here, but in a very unique way that's going to be servicing that market in a way that they're not serviced today, but at a price that they will be very happy with.
Meaning the market that really purchases on price, so they're
That's very
looking
price
for a
sensitive.
lower cost provider.
Correct. So if
Oh.
you are in the Twitter space, or and you see some of these things that say, who is a provider, who should I use today, you'll see 40 names, and there's no one dominant player, because they're all cluttered around a price and a service level that's very similar. And that market is, we have we don't play in that market because we have a very big moat around our premium service and quality that we provide. But that market, because we have the capacity that we have today, because we have the capital that we have today, because we have the understanding and the reach that we have today, we're going to go into downstream into that market with a very cool and unique solution that we expect will give us a big chunk of that market share as well, with no additional cost to our operating overheads, because we already have the infrastructure to serve it. So that's well, go ahead.
So how will you differentiate between that lower cost service and what you now call the premium service? Like what's the premium part of the package?
Yeah. I knew that question was coming. And so over the next couple of weeks, when we're going through the launch process, that differentiation will become very apparent. But I was told very clearly by our marketing team to ensure that we don't release the differentiations and the brand, the brand value proposition of the new brand.
Okay, well, we'll see it in the press very soon, I'm sure.
For sure. And we're also excited about this other brand that we just launched, which is called Packet Barrel, or what we call PYB. As you may or may not know, the barrel remittance business, and I call it a remittance business because today it's mostly that's for sending home goods and to family. But it has this unique element of being very cost efficient, including on duty. So in a barrel, once you have personal goods, family shipping down everything for you in one barrel. You pay one flat fee. And what we've done is we've digitized that process. So today, somebody in New York who wants to send something down has to go to 3 or 4 or 5 stores, carry the stuff up to their apartment, pack the barrel, carry it down, hope somebody comes picks it up. If you're in Chicago as a diaspora, you don't even have an option. Or if you're a local and you want to bring a barrel for yourself, you have to now go up, shop, pack your barrel. Today, what we do is we give you the ability to buy a barrel online. We give you a temporary address, and you can shop online and fill your barrel digitally. And then when that barrel is filled, we ship that barrel down for you. We do all the clearance process, and we deliver that barrel to you at your home. At one, you haven't gone anywhere, you haven't done any work, physically. And so we think it's going to be a big revolution. We launched it in Christmas. We saw a big uptake in Christmas, and we continue to see big interest in that business, which is a core element to, again, another market segment that we didn't serve before, but e-commerce helps us to touch various markets. That's our goal.
I remember there being a buzz about Pack Your Barrel around Christmas time, and I didn't even realize that was Mailpac. So congratulations on that initiative.
Thank
you
you.
also have plans to launch a new logistics brand, or is this the same? No, this is not the same as Pack Your Barrel.
No, so Pack Your Barrel was not one new brand, and the other brand that I told you about that I didn't mention the name is the second brand that we're going to be launching.
Oh, so you haven't released that yet?
No, we haven't released that one yet.
Okay, but that's going to be for time and cost-conscious online shoppers.
Correct.
And what's your timeline on releasing that?
We are hoping to launch. So we have a strategic partnership locally that will give us a breadth of geographic locations to kind of reach into communities in a different way. And then we have one in our Miami operations that's outside of the Aeropost network, which is what Mailpac Services is partnered with Aeropost, but this one is outside of that. So once we tie those down in about a month, we should be looking to launch.
I have a great question from one of our viewers. Shelly Ann Parkinson wants to know, what about adding offline stuff to the barrel?
So there are a number of providers who provide the ability to have, you pack a barrel and deliver a barrel. I think our focus is e-commerce, right? Because we see e-commerce solving 3 main issues. One is convenience. You can sit at your home and get the things you want without leaving your home or your office. Price, you can get things cheaper online than you can typically get in retail stores. And options. When you go to a store, you have what that store can carry in inventory. When you go online, inventory is pretty much limitless. And so we as an organization focus a lot of our solutions around e-commerce and just online fulfillment.
What about the app, the Mailpac Marketplace app? What's the concept there?
So that's been around for a while. That was one of our innovations that allow us to give you a landed price. It was for customers for a long time. Customers would say, listen, I want to shop online, but I have a budget. And when I buy the thing online, I'm not so sure what the duty is going to be. I'm not so sure what the shipping is going to be. And so I can't buy online because I don't know if it fits within my budget. And so we built this really cool technology that's add-on for your browser as well as an app that allows you to shop online and get landed prices instantly. So you'll be on Amazon and see an item and it will tell you the full landed price. So you pay that price and you never have to pay again.
How do we get that?
It's on mailpac.com. So if you go to mailpac.com, you'll see links to our marketplace platform.
So, Khary, when I have a big shot like you on the show, I have to ask about any possible acquisition plans, or what are you guys looking at right now?
So, wearing my Mailpac hat, because I'm executive chairman of Mailpac. We are, as you know, it's in our DNA, right, to grow through acquisition. And we had a couple that were teed up, really exciting, would expand us significantly in the region. And
in the region, so that means they were outside of Jamaica.
Yes, so we were looking at stuff inside Jamaica, but also looking at stuff that would take us out in the region, into the biggest markets in the region, actually. because
And when you say region, are you talking about like CARICOM, or are you talking also Latin America?
um,
Because you said biggest market, so I'm like, do you mean Trinidad, or do you mean like
so
Colombia or somewhere
so
else?
so we have acquisitions in the pipeline, both in the English-speaking Caribbean, as well as, you know, we've taken our foray from a Norfolk standpoint into the Dominican Republic, as well as into Central America, and so that has opened up some opportunities that we're exploring. But some are more closer because we had, you know, we had worked on them before. The pandemic came and we kind of put them on ice, and so those we have revisited. And so we expect, you know, acquisitions happen, and sometimes they don't. But we do expect that by the end of the year, we would have done at least 1 to 2 acquisitions that will take us into 1 to or many new markets.
Okay. The last time I had you on as well, we spoke about the possible IPO for Express Fitness, which also falls under Norfolk Equity Partners, which you are the chairman. What's your role with Norfolk again?
Executive chairman.
Executive chairman. So, what's the plan for Express Fitness now? Because that was severely affected by the pandemic. So, in like the opposite way from Mailpac, because gyms were closed down. What's the plan for Express now?
So I have to be careful here, as you know, right? But I will say that we had a number of affected businesses throughout the pandemic. You know, our Hertz, our car rental business, Express, our ICE business, and so on. All of who became more efficient, more nimble during that period, and now have come back to be much bigger and stronger than they were pre-pandemic. We expect at least one. Well, let me not say we expect. We have already signed for at least one of our other businesses to go public. And likely in this year, we may have 2. It's just you know, a matter of when that timing will be.
Okay, you heard
That's
that
all I
breaking
can say on
news,
that.
guys. Likely this year, 2 IPOs from the Norbrook Group. Okay, we
That's it.
keep watching. I'm going to end it with a question from one of our viewers. Levar had asked this question a long time ago. Well, it was a comment. The second comment, producer, says, I think Mailpac needs to do a rebranding and promotion in the local market to attract potential shoppers and reintroduce its offerings. What do you think of that?
So I think Lavar is touching on something that we see internally, which is that, you know, the market that we used to serve has changed, or let me say, the market has changed in its demographic significantly from when we came into the market in 2010 and where it is today. And so instead of rebranding, we are deepening our penetration of the market that we currently serve, and we're using a new brand to that is tailored to this newer, you know, evolution of younger, more, you know, price conscious, more, you know, aware consumer. So instead of rebranding Mailpac, we're doing that through a new brand. But I do think it's smart of Levar to see that opportunity.
And then one more from Shelly, and she's the same person who was asking about the packet barrel service. She wants to know if, she says, I plan to send 2 barrels next month. Is one Mailpac account that's needed for all services? So does she need to set up a second like packet barrel account, or can she do that through Mailpac?
Yeah, so the packet barrel platform is independent of Mailpac, which will also be independent of this new brand that we launch. I want, you know, for your viewers, Khalil, to appreciate that Mailpac Group, the publicly listed company, our goal is not to be one company, but to be a group of brands that serve consumers and different groups of consumers and with different services and solutions. So yes, PYB, you will have to get your own account, your own PYB account. I will tell you that it's very quick and easy. You should just check out the website, packyourbarrel.com. Takes 2 seconds to buy a barrel. You go on your shop, and as you know, in a week or so, when you fill that barrel, we'll ship it, clear it, and deliver it to your home. So,
and she's also suggesting that you should do this the other way around too. She says, I would really love this service to pack barrel from Jamaica as well and ship to foreign, because she can't get Jamaican stuff in foreign. Something to consider.
As I said before, you know, ultimately we hope to solve all e-commerce issues and provide the solutions for them for all consumers. So we take this one step at a time. We make sure we build our expertise around each platform that we build. But that's why, I keep saying we don't build this business for today. We're building this business for the future, because the future of e-commerce is limitless. And just by positioning ourselves and leveraging our team, our innovation, our technology, and our capital, we should be able to build a much bigger and better business than we have today.
Okay, so just before we wrap, guys, let me just show you the list of companies that fall under Norbrook Equity Partners. Since you did say one, possibly two of these could be going public this year, you have Apollo Taxi, Blueprint. Oh, Blueprint.
Oh my gosh.
Blue Mountain Peak, Driver, ePay, Pure National, Firefly Car Rental, Express Fitness, Hertz. It's enough of them, man. Jamagua, Happy Ice, Mailpac Local, Norbrook Car Rental, Norbrook Water Company, Pure National Ice, Precision Logistics, SNB Group, Starlight. Then you merge this with Blueprint.
Yes.
Grouper, Frontera, Alaska, Real Time Studios, and 365 Fitness, which falls under Express. So look out for.
Kalia, is this your way of trying to get a facial reaction from me so you know which one is going public first?
I kind of feel like I got something.
I don't know. We will see.
I have my suspicions based on your reaction.
A press release should be coming out soon announcing which one it is, but we're really excited. It's a business that, again, was COVID impacted, and is today, doing extremely well and has significant upside to grow. Would have done, I'm not allowed to say that, sorry, but financially is done extremely well coming out of COVID. And so we're excited to, leverage the markets and, get growth capital and continue to push that business, not just out of Jamaica, but again, into the region, which is our goal for all of our businesses, right? We as Norbrook have started to explore and venture into, new markets and new areas, both in the Spanish-speaking Caribbean, Central America, as well as English-speaking Caribbean. So, we're looking to work with shareholders to grow our business and continue to take them to new heights.
Awesome. Thank you so much, Khary, and all the best with everything that you do.
All right. Thank you. And thank you for your continued support.
Of course. So, guys, take our poll question for tonight, which is nothing to do with Mailpac, actually, but how do you feel about all the information being released about the ongoing SSL saga? A, they're releasing too many sensitive documents. B, I love the transparency of the information. C, I don't trust the information coming out. Or D, I'm satisfied with the coverage that it's getting. Or even E, just other. If you have a different opinion, just leave a comment. Let us know what you think about the trail of information that's been coming out about SSL. And while you're at it, hit that like button, of course. Up next, we've got your market recap, and the analysts are standing by.
This segment of Taking Stock was brought to you by Bulwark Insurance Agency, Insurance Made Easy.
Hey moneymakers, join the KRM fam with our official merch. Get it now at KalilaReynolds.com. Let's get this money. Just 2 hours with me can change your life, but don't take it from me.
Why I decided to buy Kalila's masterclass, which is, for me, was a game changer.
I'm Khalila Reynolds, financial journalist and educator, and I'm on a mission to help you get better with money. Take my all-new Money Mission Masterclass. We're talking about budgeting.
My top things today were about budgeting and investing.
We're kicking bad debt out the door.
And I also learn about how to pay off your credit card debt.
And I'm giving you the keys to wealth creation by helping you getting started with investing.
This masterclass helped me to start my investment journey.
I had so many takeaways.
The way that I look at money now and saving, I look at it different now.
With a bonus module from Keisha Bailey, my girl, the Profit Jumpstarter, who'll show you how to find great companies to invest in.
I've been in the investing industry now for over 18 years.
So give yourself the best gift. Go to KalilaReynolds.com/masterclass to join the Money Mission. Let's get this money.
The JSE Combined Index lost less than 1,000 points last week. 128 stocks traded across the main and junior markets for the week ending Friday, January 27, 2023. 47 made gains, 68 lost value, and 13 stayed the same. 160 million shares changed hands on the Jamaican dollar market, valued at $720 million. Wigton Wind Farm was the week's most traded stock. It took up 39% of market volume with 64 million shares trading. The stock was also the week's third biggest gainer, up almost 18%. It opened Monday at 73 cents. Image Plus Consultants traded the second highest last week. The stock dipped below its IPO price to open the new week at $1.99. And Fosrich rounded out last week's most traded with 8 million shares trading. The stock fell almost 10% to open Monday at $3.27. Now let's see who had the biggest gains for the week. Palace Amusement was last week's top stock, up 41%. The stock gained $840.25 to open Monday at $2,882.58. Epley 7.5% preference shares due 2024 was the week's second biggest gainer. The stock was up almost 27% to start the new week at $7.12. On the losing side now, PBS USD was last week's biggest loser, down almost 18%. The stock opened Monday at $1.28 US. Margaritaville Turks USD had the second biggest dip last week. The stock was down 15% to open the new week at 12 cents US. And Cygnus Real Estate Finance USD fell 13%, closing the week at 10 cents US. Over on the Trinidad and Tobago Stock Exchange, the composite index was mostly flat last week. National Enterprises was the most traded stock. It opened this week at $3.60 TT. Endeavour Holdings was the market's biggest gain, up almost 15% to open this week at $10.05 TT. And on the losing side, Point Leases Industrial Port Development fell almost 10% to open Monday at $3.08 TT. Over in the US, the Dow Jones rose almost 2% last week, while the S&P 500 was up 2% and the Nasdaq up 4%. At the pumps, gas and diesel prices all rose by another $4.50 last week. In foreign exchange, it took an average $154.61 Jamaican to purchase $1 last Friday. That's 35 cents less than a week before. Meanwhile, it took an average $115.75 Jamaican to purchase $1 Canadian. One British pound cost an average $193.16 Jamaican. And you could buy €1 for $170.38 Jamaican on average. Finally, on the crypto markets, Bitcoin prices rose slightly last week, with the cryptocurrency trading at $23,085 on Monday. On the other hand, Ethereum was down 2%. It traded at $1,578 on Monday. This segment of Taking Stock, The Analysts, is brought to you by Jamaican National Group. We'll help you find a way. Disclaimer. This is not intended as financial advice. Please consult a licensed financial advisor before making investment decisions.
Welcome back. It's time now for the analysts, and it's time for me to welcome Jamar Brown, who is Senior Research Analyst at JN Group. And we also have back business writer at the Observer newspaper, David Rose. Welcome back, Jamar. Welcome, David.
Good night, Kalila. Thank you.
Great to have you. I see a couple comments there in the chat. Sebastian wanted to know, why is Palace stock price so expensive? Is it the most expensive stock in Jamaica? So it's gone up to $2,800 now. Elaine says the JSE is not a real place. You know how we always said Jamaica is not a real place. And George noting that some stock prices are coming down. All right, well, let's get into our topics for tonight. Jamar, you've been taking a look at Knutsford Express. They've released their 6 months results ending November 2022. How is Knutsford doing?
Kalila, let me share my screen here. Please let me know when you're seeing it. Should be seeing it now.
Yeah, it's coming up. Okay, there we go.
Great. Right, so Knutsford recently released results for the 6 months period from June to November, to the end of November 2022, and we'll be taking a look at those tonight. First, let's start out by taking a brief look at the company overall. Knutsford Express Services Limited is a leading provider of passenger and courier transportation in Jamaica, and the company offers its services from convenient locations along Jamaica's north and south coasts, including connections to Portland, St. Mary, and Negril. Now, these services include scheduled transportation services, group and private charters, courier services, as well as airport transfers. Now, through its app, Knutsford clients are able to make reservations, purchase tickets, check routes and schedules, as well as make queries using the online chat room feature. Now, of note, there are two recent developments, one positive, one not so positive. Let's take a look at the better news first. In an effort to diversify its business and revenue streams, Knutsford recently, last year, completed the development of its super terminal and commercial center, which it calls the Knutsford Business Center, located in Draxall, St. Anne. The company describes it as a major strategic initiative that provides synergies as a key logistics point for their business customers. The complex allows Knutsford to increase its earnings by offering rentable spaces to various businesses. And as we'll see later, this business center is already contributing to Knutsford revenue and profit streams. The other bit of news is regarding KE Connect US. This business was incorporated by Knutsford in the United States to provide premium coach and bus charter services in South Florida and was intended to serve as a key foreign currency earner for the group over the medium to long term. Now, due to the downturn in travel caused by the pandemic, the entity had to halt its operations in March 2020, and the decision was taken to cease its operations entirely as at the end of the last financial year, May 31st, 2022. Now, let's dive into the meat of the matter, which is the recently published financials. Now, this will be looking at the 6-month period ending November 30th, 2022. Hopefully, we can see all the figures clearly on the screen. Yes?
I can see them, but just point at whatever you're referring to so that we can follow along with you.
All right, let's see if the pointer is working.
Yeah, it seems so.
Okay, excellent. Now, the income statement tells a story of recovering demand for transportation. Now, as we know, the tourism and transportation sectors were particularly impacted by the COVID-19 pandemic. However, we can see where things picked up for Knutsford from financial year 2022 compared to the previous financial year 2021. We see where revenues increased by 77% in financial year 2022, moving from 629 million to 1.1 billion, and net income completely reversed from a loss of 99 million to 85 million at the end of financial year 2022. Now, looking at the 6-month period now, ending November 30th, 2022, we see where this growth continued substantially. We see revenues increasing 72%, moving from 473 million to 813 million.
Wow.
Yes. And we see net income even more startlingly or more positively, moving from 14 million to 143 million for this
10x.
6-month period. Basically, 9 to 10x, yes. Well, actually 864% to be exact.
Close, yeah.
Right. Now, this increase in revenues and profits is largely due to transportation revenues growing significantly in the period due to increased local and international travel. Revenues from Knutsford's courier services have also continued to grow as it has increased its delivery touch points to a total of 18 across the island. For for the 6 months for this financial year, we see that earnings per share has also grown from 2 cents in the prior year to 29 cents for the 6 months for this year. Now let's take a look at the balance sheet to look at the health of the company currently. We'll be focusing on the first 6 months of financial year 2023 compared to financial year 2022. And again, we see a company emerging from the shock of COVID-19 fairly strong. We see that its asset base has grown by 11% from 1.4 billion at the end of financial year 2022 to 1.55 billion at the end of the 6-month period. Now, even though the company's cash position here, we see where the cash position has declined by 44%, moving from 105 million to 58 million in the 6-month period. We're not alarmed by that though, because if we look closer, we see that short-term investments have risen by 206% from 73 million to 224 million. Now, this investment in short-term assets is likely due to the high returns that the company has been able to get from money market instruments, given the overall increase that we have seen in rates locally. Taking a look at liabilities, we see that they have also grown, although marginally, by 1.4%, from 653 million to 663 million. Of note in this is the growth in taxation payable from 13 million to 31 million, as well as in accounts payable by 16% from 111 million to 130 million. However, net debt, or total debt rather, has declined in the period. This is a combination of long-term liabilities, which is this line here, as well as the current portion of notes payable and the current portion of lease liability. So that's these 3 line items here. And we have seen a total decrease, or decline rather, of 28 million. It has declined from 529 million to 501 million, which is good for the company's leverage position. Finally, looking at total equity, due to the strong profits which we see reflected in this line item here, accumulated surplus, a growth of 20% from 699 to 842, we see that total equity has increased as well by 19% in the 6-month period. Now let's take a glance at some selected ratios. And we see here the same story of a rebound from the COVID-19 slump for Knutsford. For example, we see that the gross margin before the pandemic was 18.3% in 2019, and we saw successive declines in the 2 pandemic years, leading it to actually be in the negative territory in 2021. And we have seen a subsequent reversal where we see that gross margin is now 12.1%. And the same can be seen for the other ratios. Net profit margin, return on assets, return on equity, all declined during the COVID years and are all now rebounding post-pandemic. Current ratio has declined year over year, but it is still at a healthy 1.5. And the reason for this decline year over year in 2022 can be the same thing that we mentioned earlier in terms of the company decreasing its cash position. But as said, still a healthy 1.5%, 1.5 times rather. Now finally, let's take a look at the price chart for Knutsford. And the price chart tells the same story we saw from the financials, where prior to the pandemic, at 2018 to 2019, price was at a stable at around $12. Then 2020, we see a drastic decline, well, relatively, to the price bouncing between $5 and $6 between the pandemic years. And then we see an upswing post-pandemic in the price to around $8 to $9 in 2022. However, as you can see here, since the recent positive results, there has been a significant price action, leading the price to now be at around $12.47. That's as at yesterday, the end of trading yesterday. Now, at these levels, the price is currently trading at a PE of 29x, and this is compared to the service industry average on the junior market of 24x. At this price, we believe that the company is trading high and is currently overvalued compared to the service industry average PE. Right. But to sum it all up, we like the business model overall. We like the improvements in operational efficiencies, which management has undertaken since the pandemic. And we like the growth story, particularly them diversifying and moving into real estate and rental income. However, as stated, we believe investors should note that current prices are a bit high.
So what do we do? Do we wait for the prices to dip a bit, if indeed it actually dips? Because we take a risk that it won't dip and it just keeps climbing.
Well, for some context, prices are close to the 52-week high, which is around $13. So they won't necessarily dip, but it is a bit high compared to its 52-week average and its 52-week high. So yeah.
What type of investor should be considering Knutsford Express at this time?
Well, we believe the stock it's a good buy for medium to long-term investors. As I said, the business model is solid, and they do have a large market share as it relates to premium travel in the country. So we don't see them falling off in the medium to long term. However, the market now, especially with news of a possible recession, it's mercurial, so we can't predict short term what market conditions will be like. But for the medium to long term investor, we believe it's a solid stock.
Okay. The next stock that we're going to look at this evening is Palace Amusement. David, you've been looking at what's going on with Palace. We saw just now in the market recap where it was the biggest gain for the past week, up 40%. So tell us about Palace.
So I remember you mentioned at the beginning of the session where somebody mentioned about, why is Palace trading for so much? And there's the context to it. In the case of Palace Amusement has a very small share float. So Palace has about 1.4 million shares outstanding, and about 80 to 90% of that is held by the top 10 shareholders and executives. So as a result, the company's shares are very thinly traded. And remember, for those who don't know, up to the end of 2019, or in that period, if you wanted to actually get any share in the JSE or buy any company, or even sell in a company, you had to buy 100 units. So at the time when there were such few sellers, and combined with the fact that you have to pay 100 times 40 figures, you're talking about like what, more than 200 grand just to get into Palace or take a position. And that's why Palace stock price was so high. Last week's AGM, last week Tuesday, management said that the stock is a precursor to an equity raise. So you never smoke without fire, because there's a shareholder there who said years ago, in 2018, he said the board should consider that stock split, but never did it. And now they basically
getting some terrible feedback. I'm not sure if it's from you, David. It might be from you, but there's some.
Can you hear me better?
I'm still hearing the feedback. I'm not sure what's going on.
That's very odd. You can
Do you
hear
have a fan on or something nearby?
Give me a second.
Okay, it's gone. The sound is gone, so I think it really was coming from David's mic. Let me see some other comments here in the chat. Elaine wants to know what is PAL's dividend yield. Learn, Grow, Invest says, wow, I remember those days, 100 unit minimum. What else do we have? David is back. I'm still hearing that feedback.
That's odd, because I sent my fan off and I don't have anything that is on right now. That's odd.
I don't know. Well, continue. We're going to try bear with it.
No problem. So, yeah, what I was pointing out was that the company said they're planning to do a equity raise. They haven't decided what route they're going to take as yet, which, indicates that they're still speaking with brokers about what the best route is to take for that raise. But that's the reality. So, Palace recorded gross losses going into Q1, which was for them September to December. Sure. Can you hear better, Karina?
Yes, much, much better.
Not sure if it's from my headphones, but yeah. So what I was saying was that, company recorded gross losses, which means that by the time person stepped into the theater, there was already a loss. But they're pointing that, they're still seeing pre-COVID, they haven't reached pre-COVID traffic as yet, or, in this case, attendance. But, in October, they have 50,000 patrons. November, December, they had 8,000 plus. And we just saw the release of Avatar, The Way of Water, which is the 4th highest grossing film of all time so far, which, is good for Palace, because the way movie theaters make most of their money is that the more successful the film and the longer time it actually goes on, the more money that theater actually makes. So studios make most of the money in the first couple weeks after the release of a movie. And in the case of Palace, when a movie does pretty well and it goes on for more weeks, continues going on, they earn more and more that actual revenue in a sense. So let's say in the first 2-3 weeks, 50-50 split. Then they go to 60-40, 60 in the case of Palace. And it just goes on. But right now, Palace has a loan that they have to pay back to Victoria Mutual Investments Limited coming September, and they have another maturity for a female loan in the next 2 to 3 years. So they are choosing, to refocus their position. So they mentioned that they're going to be focusing on trying to redesign and redevelop the website, considering to, introduce a premium service with a butler, come and serve you, in a particular space. They're also looking to, other ways, to collaborate and grow revenue, especially on the digital side and also for marketing. And, Palace is a business that is needed, just considering the reality that we don't have other theater providers in the space. And we can look over to our relatives, or I should say, Palace's relatively sister company in Trinidad, in this case, Cinema One Limited, where they just had a rights issue and they raised TT $6.02 million, which is just about over 125 million J, and for them, that's what was needed to help assist them in their growth projections and, pay on some debt and open up a new location. So it's going to be interesting to see what Palace does. But right now, Palace's stock price hit that new all-time high last week. It just has $3,300, traded back down today to around the 2,400 range. But it's going to be a 600 to 1 split. So if the stock price goes at $2,400 at February 24, I believe, then if you had 1 share, you would now have 600 units or 600 shares, and your stock price would become $4. So value hasn't changed, but the number of shares has increased, but the price has decreased. So that's how a stock split works. So one will go up, in this case, the number of shares, the price will come down to reflect the increased number of shares.
Do we have a date for when that will become effective?
I'd have to check back, but I believe it's February 24, around that period. I can't remember this. Apologies. So it's February 28 when it actually becomes effective. So the end of February, basically.
Okay. Yeah. Well, we'll definitely look out for that.
Yeah. And I mean, that's just really it in terms of the Palace. We just have to look and see if they will try and innovate effectively and capitalize effectively on the capital that is out there looking for a home, and try and resuscitate the business into a better outfit.
All right. Thank you so much, David. Thank you again for that great breakdown of Palace, also throwing in what was going on with Cinema One as well. And thank you to Jamar, looking out for Knutsford Express and what these companies are going to bring us over the next year for 2023. So just stay tuned. After the break, we will take your final comments.
This segment of Taking Stock, The Analysts, was brought to you by Jamaica National Group. We'll help you find a way.
Just a few comments here that I'm going to take in the chat. So let me see. No, Elaine says no innovation from Palace. You heard about the butler service, David just told us. I want to see what that's going to be like and what other possible innovation they could be coming with. Devon says Palace APO coming soon. Is it? Well, we'll see. What else do we have? Ryan says from 2010, dividend payments from Palace was between $2 to $5. Learn, Grow, Invest said, did I miss the ROI highlight video? We didn't play it in this show. It's on my IG. I was thinking tonight, I thought it too late, that we probably should have put it in the show. But yeah, check it out on IG. I posted it yesterday or a few days ago. Thursday, I think. So you have to scroll back a little bit and you'll find it. Or I'll just send it to you on WhatsApp, Jermaine. So the ROI highlight video, a whole lot happened last week. Oh, yes, we got to talk. What else? What else we have? So I am logged in as a guest tonight, so I cannot control the cursor. I cannot control the comments. So Madam Producer, please put up another comment for me. Yes, Learn, Grow, Invest says exactly the value hasn't changed. Many miss that with a stock split. So just to remind you, David explained it, but let's say you have, I wish I had some money in my hand right now, but let's say you have a $5,000 bill in one hand and you have five $1,000 bills in the other hand. Which do you prefer? Do you prefer the hard $5,000 bill or the five single $1,000 bills? It's the same thing, exact same money, same value, but some people would prefer the five $1,000 bills. Why? Because it's easier to trade with, right? Easier to get change. There might be reasons they prefer, or you might prefer the five $1,000 bills over the hard 5,000. And that's basically how a stock split, that's basically how it works, right? So 6 of one, half a dozen of the other. But what happens is that because this hand might be easier to trade with, the value often goes up a little bit more because you start to see more trading with this. So this one might put on and nothing do with it because the price is too high. But now that you have a smaller number or smaller numbers, you start suddenly seeing more trading activity going on surrounding that stock. So I think that's the simplest way that I can explain it. Elaine says, I saw you crying in one of those videos. Yes, girl, I bawled my heart out that week. I sure did. I sure did. It was an emotional few days in Puerto Rico. A lot of realizations. You know, you never realize how much your mindset really holds you back from being great. Your mindset. I never thought that I had mindset issues. Turns out I did. And probably still do. But it is realizing those things that can help us to break through. So that's why I was right there in tears, realizing this mindset issue and realizing that what the capability and the potential of all of this, of KRM truly is, that's the breakthrough I had. I'm going to share some more about that on my other platforms. But right now, I want to thank you for joining us for this week. That has been our show. Reminding you once again to hit the like button, to subscribe to the channel, and of course, share this video with a friend, and get on our newsletter at KalilaReynolds.com/newsletter. Reminding you that new email subscribers get a copy of my free broker guide, and you want to turn on those post notifications so that you can be the first to see everything when it drops. I'm going to be dropping quite a few videos this week, particularly as it relates to the SSL situation. We're kind of breaking down some of the things that have been revealed and helping you to understand it more, because we want to help people learn more about money. So of course we can all get this money together. Follow me on Instagram, Twitter, and TikTok at Khalila Ray, and follow at KRM_business news on Instagram. These are my only accounts. I do not have any backup accounts. Got it? No need to DM me. Is this you? No, it's not. It's not. Just report the page and block them. If you want to connect with the analysts this week, check the description box below for their contact information, and also visit our website, KhalilaReynolds.com, for financial information you can use however you like it. You can watch, you can listen, or you can read. Now tell a friend about taking stock, because investing is still the new sexy. So let's make it cool to talk about money. I'm Khalila Reynolds. Thanks for watching.
Let's get this money.